Oh, well, you're besides, equities on another major role, the currencies and the gold are in play.
Yeah, we got that situation where people are waking up to the fact that maybe the Fed is actually truly desirous of pushing the dollar down. They can never say it. We'll go back and revisit that conversation. They can't say it because it's not their bailiwick. And the last we heard from Trump was 4 weeks ago or so when we talked about, oh, yeah, a stronger dollar is good. Doesn't matter. Look at the policy, and as long as the Fed is now considered the new, and more people are waking up to it, they've gone down the road of assuring some sense of social justice. And again, I'm not going to argue the moral implications of that, but I'm going to argue the financial purview of that. And yes, you could say, well, employment is their mandate, but that's really going far afield. So, and it's just a matter of that that they're going far afield, and the world's starting to realize it. And why should I buy dollar assets? I'm going to have to fight them and what they're doing for a hell of a long time. All you do is have to look at what's going on in the bond market, from the corporate bonds to everything else. The Fed has absolutely broken this. There's no way to value bonds, even corporate bonds now. There's really not. Yes, you value them off of what the Fed is doing, but at the end of the day, from a capitalism point of view, it's very difficult to put a value on debt, because once the Fed intervenes, they, by design, because this goes back to Bernanke's Jackson Hole speech of August 2010, when he brought to the fore the portfolio balance channel, which is what the Fed was trying to accomplish through QE, was to get people to rebalance their portfolio. Well, now it's certainly seems to be a part of the design of Fed policy. I think very dangerous, but it's the world in which we live, so we have to go from there. But as I said, Judd, we started on Friday, that the yen was going to be a critical factor here, because we needed to stop looking at spreads and start seeing the dollar as an entity unto itself, which is why I was looking for the yen to start to rally. Now, today doesn't quite do it, of course, but it is the beginning of a move. But here we are again. We've got two pivots in play, which are really the same, unfortunately, because of the weighting of the indexes. But we have the euro with the 200 week, which we've talked about for several weeks now. And we have the dollar index at the 200 week. So they're both in play here. So as much, the euro has been a very nice move for the first 2 days of the week, but we've seen this done there, been that. So let's see how it plays with that 200 week pivot, and we'll be able to pick it up more. And the yen is, again, with it too. Let's see, I'm going to put up a yen chart. I'm using futures right now. It's not my favorite way to look at it, but we'll look at it.
So, yeah, I threw up the cash.
Okay, let me go to the cash then I'll be.
I mean, I can throw up the futures.
No, it's fine. It's fine. Not a problem. Let me go.
Yeah, I think once we start closing above that 200 week.
Yeah. We have to do. I mean, we've done it once, twice. On interweek we've done that, but and gotten no momentum out of it. So.
But what strikes me is the gold bond on the semi-annual again is back into play, with a huge ORH breakout going on.
I mean, the gold is getting certainly a bid, because, now people are, once the dollar was started to sell off. And again, the important thing, and I was in the PAX room yesterday and we talked about it, is that the gold has been a total play against everything but the dollar. Even though it's up against the dollar, but it's been much more dramatic move against the other fiat currencies. Now I'd actually like to see the gold kind of settle in here with the dollar selling off and for there to be somewhat corrective there. But as you can see, people are coming for the gold anyway.
Well, yeah, it was yesterday too that the last couple of days when the equities got strong, the gold didn't back off.
Yeah, and I'm going to bring up another issue here because actually it was ferreted out by, I want to say Randy, because we started talking about the platinum. And if you go back and look at the platinum of, I think it's March of 2008. Can you put up that chart?
Hang on. There it is.
Okay. So you see, and if you look at platinum gold at the same time, platinum had, hold on, let me get to that chart of mine. I'm going to put it up on a monthly, the platinum gold differential.
Okay, hang on a second.
Okay. So you see, if you go back to February of 08, okay?
Hold on a second.
Where it makes its all-time high on being long platinum and short gold.
Just let it build a second. I got to make sure I'm on the right.
It's the monthly continuation.
Yeah, I got that. I just had to get the right settings so it'll look proper.
Yeah, so got it.
Okay, it's up.
Okay. So you see, that's where platinum made its all-time high, and the spread, of course, made its all-time high. Now, that was $1,184 positive, I believe, right? Or was it 118? No, I think it was 1,100.
Yeah, so 2008.
What was the high in the platinum outright? I'm on that chart. Oh, yeah, $2,200. Okay. So that spread was $1,100 positive. So we've had a $2,000 swing in that spread because now we're negative $929. Now, this is critical to me because I've always maintained that the precious metal aspect of platinum is much more to be found in Asia than in other parts of the world. Jewelry, but the Asians have been buying platinum, and that's when you, so that kind of coincides, not kind of, it coincides with the massive fiscal stimulus that was coming out of China that really softened the blow of the great financial crisis. Of the great financial crisis because there was so much liquidity being provided for in Asia. Now we've seen that correct because Asia, you know, after China did all its work and it hasn't been to that, and it really reflects that Asia has been slower growth. Of course, we know than the United States, and Europe is a different story. But if this, I'm only starting to watch it because if Asia starts to pick up, because the fiscal stimulus story right now will not be an Asian story. It's either Europe and the United States or it's not at all. Because Asia, China especially, did its work in 2008, 9, and 10 when the world economy was absolutely on its ass, and they did everything they could to throw at creating stimulus, not so much monetary, but certainly fiscal. So that's when we saw this red line. So if the spread starts to correct, and I'm watching it very closely, that'll tell me that Asia is starting to pick up a little bit, or they're even getting a little bit more nervous about dollar assets. I mean, that's the only reason I bring that up. I don't know whether anybody cares about it or not, but
well,
put it on my radar.
Speaking of that, Rob came in and started buying cattle today, and it was really good timing with the dollar weakening.
Ah, sorry, I missed it. Because when he's buying, I'm buying. He's awfully good. Thank you. I am out of my oats. It was a nice play. Now I don't even know if I'm going to shift to December or not. I'm just kind of watching that closely. So you've got all this taking place now. And the yen to me was really critical. It hasn't closed yet. And we're back into these pivot areas. And we're coming at the month end, quarter end. So let's see. Let's do some work on the. I'm going to leave you guys to do some work on the.
Well, it's 106. I think is going to be the the monthly level at 105.97 and a half.
Well, you see, I'm looking at the futures, and we closed at 93.36 on March 31st at the first quarter. Look at last night's low.
Oh yeah.
So you now can define this, okay? And again, I don't find much to love about the yen. So people say, well, why are you so concerned about it? Because it's more, will tell me about the dollar. Because if the yen can get some traction to rally, it'll really signify that what I'm thinking is about to happen is going to happen. And yeah, I don't need Goldman to all of a sudden tell me that they're.
I think yen's going to hold that level.
Well, we'll see. You know what, Judd? I've been burnt, but you know what? Actually, this is now setting up, and that's why the movement in the euro this week. So we got the euro above the 200-week barely. We've got the dollar trading right at the 200-week moving average. So you know things are setting up here, but let's see. They've given me really nice places to take my profit and re-enter, with short-term, with minimal pain, I think. But I'm paying attention to it. And
Tuesday, Wednesday is going to be big next week because that's month end. So that's when all this stuff lines up.
And it may be what pushes the equity markets for their next leg higher. As much as I think that I don't fundamentally the fundamentals that are near and dear to me, I don't find.
Well, I've got higher targets, so and I don't see why we don't go to them, especially in the Nasdaq.
Yeah. So yes, and a weaker dollar would be the impetus. By the way, the interest rates to me are a non-factor right now, and you can tell by how little they're trading. I mean, they're just drying up because, what the hell, if I have interest rate exposure, why should I hedge? I know the Fed is going to be there. The Fed has two things left to do here. If people rushed to dollars, I'm talking about domestic people out of markets and just were hoarding cash, the Fed goes to negative interest rates. I'm willing to believe that. I think that'll be that. I think, and we got yield curve control, which is setting in the movement. Look at even last night when Navarro with that, and when I looked at the comment, and believe me, I said, first of all, he should have been fired last night. They put him in handcuffs and let him out of the office, because if the guy's not trading or at least having somebody's there, I'm a monkey's uncle. I've been around way too long. Because he said those comments absolutely in an effort to affect the market, especially at the time that he did it. Now, I'm not inside. That's a supposition on my part and conjecture, but that's from years of knowledge. It's just pathetic. And it's not sour grapes. I was short. I had sold a very small position up at 31.22 and covered them, going, what the hell is this break? I think I sent you a note. What the hell is this?
Yeah. And one of the other guys was short. He had an order in at 77. He thought it was a bad out.
Yeah, believe me, I got out at 1. I know, but so be it. But that's the world in which we do live in. But that was pathetic. And then of course they couldn't walk it back fast enough. And he said, "Well, I was misunderstood." I saw what you said. You put it out there and you put it out there, and of course you were on Fox, and they were gonna, they were gonna not, just let it go the way it was supposed to go, and it was, a pathetic comment. But again, it's the world in which we live in. Shame on the markets for giving him credibility because he deserves none. But I am dollar fixated right now, and this again may prove very short-lived. And be nothing. So I'm being very patient. It's been a nice run. We've got a nice move in the euro. I told you, when was I on with you guys? Thursday, Friday?
Oh, no, you were doing them on Friday again.
Yeah. I you know what? And Friday was very painful because the euro ran up, and I said, well, and I traded it well, but I lost money. But it was, I thought I was onto something on Friday. But I could see over the weekend the news out of Europe wasn't bad. And again, it's just, as always with currencies, it's relative. And the news out of Europe right now, the hell with the frugal four, it's all German-centric now. And you know what? As you guys should be prepped as much as anybody, look at the movements we've seen in the European bond spreads. Second day in a row, the Italians have kicked everybody's ass, so we're getting compression on those, which is euro positive, by the way. Because again, as I explained to my guys at Praxis this morning, you watch those, you don't have to trade them, but they will show you moves in the euro, because anytime you're getting that much compression, I believe that you're having bond investors. The European bonds are much more interesting, but I could build a synthetic euro bond by buying X amount of Italian, X amount of Greek, X amount of Spanish, and I can get a yield higher than the US 10-year through the creation of it. Yes, I'm taking risk, but I'm not looking for it as an investment. It's a mere trade, but it does become directional of the euro. You guys understand that? If you don't, speak up, because let's walk through it.
Yeah, let's go ahead. I'm into the European bonds right now.
Okay, so if the Italian is 130 basis point yield, and the Greek is, let's say, 120, and the Spanish is, I don't know, 25, and yeah, I can buy a basket of these without buying the bunds and get a commensurate yield, and I'm still in euros. I'm not in pesetas, I'm not in lira, I'm in euros. And if I think that the European Union is going to be okay here, especially on a relative basis, and it's, again, it's not an investment, it's a trade, but I'm getting as much yield as I am on the US 10-year. So anybody who's only doing the US 10-year against the bund with a rising euro is missing part of the picture. That's my point. Does that clarify it?
Ira, do you think there's enough in that to cover the hedging costs?
Wait a minute. Where the hell did you come from?
I don't know.
Okay. I'm glad to hear your voice.
Thanks.
You don't have to hedge it. Again.
No?
No, because if I want to be bullish, if I want to be negative the dollar and bullish the euro, now I don't have to pay away anything.
Yeah, and you're getting paid in euros.
And especially if, we start to get some momentum above that 200-week pivot. Again, we're playing here. You don't have to sit here. And those things move around dramatically. That's why. Anytime if you come out, and again, I'm going to point something out to you. If you get leaks, meaning, like the White House leaks, and, this guy leaks, Kudlow leaks, Navarro leaks. If the only one who doesn't leak, I think, is Lighthizer. And it was interesting that he didn't show up to either support or criticize Navarro last night. I was waiting for something from Lighthizer. I'm still waiting for something, because that's an embarrassment to him, what Navarro did. Because Lighthizer was out last week talking about phase one was in place and the Chinese were adhering to it. So now you get this pimp ass Navarro to go the other way. Lighthizer should have been out there whacking him. You're going to get movement, and stuff gets leaked in Europe. But I think that Reuters is the leak source for European insiders. And believe me, they're just as nefarious interactions and venal as the United States. I would argue probably more so. So when things start going one way, it's like you're getting the Italian, German yields compressed. Somebody comes out and then makes a statement and backs it up. So it's a dangerous trade. That's why I trade it. I do not live with it. I try to create butterflies because if I think, like here, I'm looking at it now. So do I buy the French and sell the German and sell the Italian? You know, because it's one way to play with it. But I'm looking. I'm not committed. It is really not. I'm much more committed to the euro right now. That's my sense. So
the spread that looks good is DAX Bund.
Outstanding. I'm glad you brought that up. And let me say something, because I talked about it with the Praxis guys this morning. The DAX is actually performing phenomenally, and I was almost going to buy it last night during the sell-off in the S&P, because the DAX does open at 7:15 or so Chicago time at night. I don't know if you guys know that, so it trades. And it was getting hit, but the DAX has performed very well, even with a rising euro. So think about that. The euro is not nearly at a level that concerns global investors yet. In fact, the two of them going together, I find very interesting. Don't discount that. So I'm glad you brought that up, Judd, because on a relative basis, the European stock indexes, as if you listen to the private equity groups in the U.S., are they find a lot more value there than they do in the U.S. equity market. So it's a good reason to keep your eye on it.
I think Ben Bernanke's licking his chops, Ira. He wishes he was back in the saddle, devaluing the dollar.
Shh, you're not supposed to say that. And Mnuchin's got very quiet. But the Fed actions, if the Fed is a social justice agency, which they seem to have taken on that mantle, really, it makes me nervous holding dollars.
Ira, can you explain to me what you mean by social justice? Because a devalued dollar affects the most vulnerable in our society. So
It can. Not always the case, but it can. When I say social justice, is when they say that these people have lost jobs through no fault of their own. So does that keep the Fed in play until the unemployment returns to 3.5%? Because don't forget, they pivoted when the unemployment, they pivoted and started new QE and cutting rates when unemployment was at 3.5%. And as Powell discussed, if they're in an optimistic manner, he picks up the number that I've been talking about for 2 months, because my criterion is this: if you want to watch and understand Fed policy, and again, I don't care about the data. The data is meaningless. I care about Fed policy. And if the Fed, and this is my hypothetical question to all traders and investors, if by December, unemployment in the U.S. is 9%, and I'm being very optimistic, but that's the same number that Bernanke used to Congress in his testimony last week, and inflation is 6%, does the Fed move off their present stance?
Not in my opinion.
Well, to me, it's the important question. So if you don't think so, then they're going to stay the course on unemployment, which makes them a social justice agency, because they believe that the last hired, first fired, was most put upon, as Bernanke talks, as Powell talks about, again, through no fault of their own. So how can you change policy if that's what your new criterion is? How can you change policy? You're not concerned about inflation. You're willing to let inflation run hot, which I believe they've always wanted to believe anyway. But that's the world we're in. So that makes them a social justice agency. They are going to pursue that employment, that desired employment outcome, regardless of what else is going on. So if employment, I should say, lags, And Powell said they're on this path through the end of 2022 anyway. Social justice, my friends, that's not economic policy. That's not responding to economic, that is a response to a labor situation. That's my take on it. And more people are actually picking up, even John Authers picks it up and a few others have been looking because it's, and that's my point about that. That's why my concern about the dollar growth. It's not a concern. You know, we can discuss, would the dollar be better off, you know, going lower? I think the world economy would. In fact, I think Authors has a piece out today, if I'm not mistaken. Let me see if I can find it. Hold on. What's the title of it? It's called, it's on Bloomberg. John Authers. Oh, I'm doing a FRA podcast today.
Yeah, I think Richard is, well, he was in.
Yeah. Wait, hold on one second. Let me see if I can find it. Shit. Okay, hold on.
You know, Bosco's also put in here that they're, the Europe automakers are trying to replace palladium with platinum for catalysts.
Yeah, well, you know what? Why not? Look at the price levels. But I view it more as a statement about the Asian situation. I think it's actually good. But John Authers' piece today is called, damn it. I'm sorry.
I don't know, I looked at it last night, I can't remember what it was.
He talks about the world needs a weaker dollar. I believe, I don't have it. I will find it. So it's, to me, that's, you know, extremely important. And more people are picking up. You know, I don't need gold, as I told you, Judd. Goldman's comments, I don't care where they've been. And tomorrow, if the dollar went up 1.5%, they'd put out a bullish dollar scenario. It's a finger in the wind. They may as well be running for office. That's the way that I see that. Let's see.
Yeah, well, you know, that.
Oh, here's the title. A weaker dollar is just what the world needs. That's his piece today. So making the case. And you know what? And it really is still about, you know, the financial aspects of it. That's the critical factor. So and that's where we sit. So again, I'd like to see the yen probably close. Judd, what number you have in the cash? Let me go to my cash chart.
The cash chart's 105.97 and a half.
Okay. And there's some nice.
So yeah, that's at next. It's just going from one level to the next level, and that's the next level.
Yeah.
And underneath it, it's gone.
And I'll explain to you. You know what, Pax? I didn't talk about this yesterday, but I did talk about this with Praxis this morning. Is that when you really look at the yen, and it's not that I find much to love about the yen, you know, the way the BOJ is operated here with the Ministry of Finance. But I could argue that on a real yield basis, especially for Japanese investors, domestic investors, the yen has a real, the JGBs have a real return because they do have some deflation. So anything that's either zero or a little bit positive gives you a real yield, a positive real yield. Unlike in the United States, real yields are negative, highly negative. Because what's the inflation? So if the 10-year is trading 70 basis points and inflation is, you know, 1.3%, you're running a negative real yield of 60 basis points. So, you know, you got to start factoring those in too. And Pax's comments about hedging, we don't want to hedge. You know what? If I'm getting a real yield and I'm getting a negative real yield in the US, I'm not going to hedge. Yeah, I'm going to have movements, but again, we don't have any momentum to this trade yet. this is, inside Ira's brain at times, which, when I get early, it's the worst of all worlds because I suffer a lot of pain. So let's see.
Judd, since Ira said that, can we look at gold and yen?
Yeah.
Oh, good. Let's see, you guys. That's why we're doing this work. And again, we'd like to see some correction on these gold currencies. One of my major premises here. Let's see.
Hold on. All right. So it's right up at oscillator resistance on the weekly. Let's do the other.
Yeah, I
close.
think we're at all-time highs.
Well, it is against the dollar. It's not against the futures. So it's
Right. Okay.
So I'm just trying to go through every single one of those looks. Yuan close to the May highs of 2018.
So if I could design this board to fit my mindset, the gold would do nothing. It's going to be hard to do nothing here because we're up against these highs. But I'd like to see silver and platinum really break out here in a big way, combined with the Bloomberg Commodity Index, which if you put that up, I don't know if you can, Joe.
Yeah, I can put it up. I was just looking at the silver earlier today, Ira.
Yeah.
And it needs just another. It needs another 20 cents.
Yeah, I agree. And there's 59,000 open interest in July, which becomes deliverable, I think, on Monday. First notice.
Yeah, that's what they go off Monday or Tuesday.
Well, first notice day. That's what you care about. They'll trade all the way till late July, but you don't want to. But if you put up a daily on the Bloomberg Commodity Index.
Hold on, let me put that up. Bosco was asking something. I was trying to read it. I wasn't. Yeah, and the Bloomberg Commodity Index is broken out.
But there's that gap at 65.20 or so.
Yeah, hang on a second. I gotta spread this chart out. Yeah, it's broken out on the oscillator, which is really positive. Today's low was oscillator support.
Yeah.
So the gap is at 65,
13.
let's say 13.
Yeah. So if we can close above there, then I would look, and really, I hope the gold just sits. That would be my ideal trade. And we'd see the gold, silver come back to around, we're sitting up here at what was prior to the move in March was all-time highs. The previous all-time high for forever was 98.7 ounces of silver to an ounce of gold. And I believe that's probably right where we're back sitting at. But, of course, we went up to over 120. Yeah, here's where we're sitting, 98.77.
Yeah, right there.
So, we have all these things in play. This is, I think, very important stuff. Keep your eyes on European bonds, the DAX. It's definitely in a better situation than most people want to believe. And I still think we're seeing short people who are long dollars covering positions. That's why there's really no momentum to this yet. Because I just looked to see, as I brought up yesterday with Pax's group, how many people I was arguing with for the last 4 weeks, even on my blog, which is fine. I'm not complaining about it. People were making their case on the dollar bull. But after Wolfgang Schweibel's pivot, I got very definitively bearish the dollar. So let's see what happens here. And we're going to have, this is not going to be a one-way, it can't be a one-way move because everybody is so convinced, or we're convinced of.
Yeah, I just keep looking at the bond, the gold against the bonds, and how big that breakout is.
Yeah, no, that's and listen, Judd, your room, we caught the S&P gold.
Oh yeah,
in a big way. That was a great piece of work on the part of all of you. It was again, it's combined efforts. And that's all I got. Any questions before I head out of here? Because I got to go take care of
I got a question, Ira.
Who is that, Bosco?
Yeah.
Okay.
So
This
If
question costs $100. Oh, you already paid. Go ahead.
So
Go ahead.
what would you say if somebody uses their gold for collateral and use it for a loan and invests in the market, like equities, or what would you suggest? What would be the best place to
I
go?
would call that high quality capitalism. I would haircut, just like the clearing, you can pledge gold for collateral. You know that.
Yeah.
You and I have gone through this, Bosco. So you can put up gold as long as it's, certified by a reputable and not some, as they would say in Yiddish, machuk fabricator. But if it's got a legitimate serial and is gone through the real product, you can pledge it for collateral. They're going to haircut you, but so what? So if I had 100 ounces of gold, which would have a value of $180,000, let's say, and I pledged it for, so if they gave me 90% collateral, fine. And if the price dropped to 1,000 and they said, well, you got to put up another, whatever, okay, even more, but I think that's a splendid idea. Because again, Bosco, you and I have talked about this, gold in motion. You don't have to let it sit dormant. You can use it as a currency, meaning a store of value, and turn it into a medium of exchange by pledging as collateral.
Doesn't the COMEX, you could do that on the COMEX, right?
Yeah, the CME. I could put up gold at my clearinghouse. In fact, they sent out a notice after, I think it was in April, just because the SEC and the CFTC, I believe, and you can go to their website and ask that question and find out. But you can use your gold. See, and if they were smart, as gold. So let's say that I had pledged my gold, I'd put up my gold as collateral at $1,300. Okay, we'll go back to last June, a year ago, when gold broke out, and now it's up to $1,800. So I would keep adjusting that collateral, so I would really empower it and give people an incentive to do exactly that, unlike your cash dollars, right?
So you become automatically hedged. You have your gold backing and you can invest in.
Yeah. I mean, what Judd and I learned, that's a Texas hedge. You know what? I've got my gold, and now I'm buying mining stocks, or I'm buying more gold. So yes, I'm Texas. I'm leveraging up leverage.
Thank you.
Anybody else?
All right, guys.
All right, Judd. Listen. Yeah,
Go ahead.
I'm available as we're going to do more and more of these.
Well, I'm here every day. I mean,
Yeah.
every once in a while, I got to sneak off for a couple hours, but otherwise I'm here.
Okay. Yeah. You know what? In last week, I got a lot of Twitter hits. So somebody's putting a lot of my stuff out on Twitter. Keep doing it, because we're going to try to generate something bigger and better.
Okay. Yeah. And I also noticed that we got a lot of hits on that, on the YouTubes last month.
Oh,
We got a
yeah.
lot
Good.
of
How
hits.
many?
I don't know. I think we had 400 or 500 hits last month.
Oh, good. On each one of them?
I don't know if on each one of them, but they tell you how many hits you get, people coming in and re-looking at them. And some of the guys are linking them to them, and I don't think CQG's linked to them yet.
Yeah, CQG should be doing it, because you know what? This is real time. As you know, I was teasing Pax this morning, because yesterday's call, Pax, that was real time. Is he still on?
Pax isn't in here.
Oh, who was it? Who is it? Angelo?
Yeah, that's Angelo's. Pax is.
Oh, I keep thinking it's Matt. I'm sorry.
Pax is in his own deal.
Angelo? Are you still with me?
Okay. He should be here. He's probably.
That's right. Okay. I apologize for that, for the they sound so much alike. I'm not seeing, I'm only hearing. So Okay, we're engaged.
Okay.
Okay, so, and I'll tell you in the morning if I really got something to say, but I can't get everywhere. And now that I'm doing a Benugli, I'm with Richard and John Walden is.
Well, that'll be great.
Well, we'll see. You know, I don't know where he goes. You know, I've read his stuff for so many years. Sometimes I'm a little tired of the promotion, but he's smart and he's very very astute. So yeah, we'll see. If you think of any questions, you send them to Richard because he can ask them.
Okay.
Okay.
All right. Great.
All right. Thanks.
Thanks.
Yep. No problem. Absolutely good.